the key with Bitcoin is the protocol itself is stable. Nobody can censor the network. It's distributed enough. No one can censor or corrupt the protocol. No one can control the price. It is sufficiently decentralized and global that no company, no country, no capitalist has enough influence to be able to put it at risk. And it is the one thing that we can all agree on in that regard. So when we go to the question of companies adopting the Bitcoin standard, Jeff, I think the primary guiding principle is you want to do this well. The question is, are you going to adopt Bitcoin as your primary treasury reserve asset? That means like flip 90% of your long-term capital to Bitcoin, right? 5%, 2% doesn't really do the job. You really want the vast majority of your long-term capital. Substantially, you want 100% of long-term capital to be in Bitcoin. And I define that as you've got working capital. If you need $50 million in working capital, then you hold that in the fiat currency of your liabilities. Everything else is long-term capital. You flip that to Bitcoin. And then after that, right, you've got two parts of the business. You've got the operating business, and then you've got the treasury, or you've got the balance sheet part of the business. I don't have any advice to people on the operating part of the business. Every single operating business is different. The only thing you can say is that 0.1% of operating businesses are good, and 99.9% of operating businesses struggle at all times. I mean, that's the big piece of wisdom I have for you. If you feel like your business is under pressure and is difficult and challenging, that makes you one, of the 99.9% that feels the same way. The only people that don't feel that way are the ones that run the monopolies, that are either state-sanctioned monopolies or digital monopolies, and everybody else struggles. And so there's no simple unlock there. I'm going to tell you, get a monopoly from the government of the local country you operate in. That's my suggestion. Or maybe you're lucky enough to be Apple or Google or Microsoft. But if you're not, then the operating business is all about finding a monopoly. And it's not easy to fix that. It's pretty obvious, right? It's quite obvious. It's hard to be better than Amazon or Microsoft or Apple. So the real advice is focus upon the balance sheet, where it is very easy to be better than the US dollar standard or the fiat standard company. So that's the part of your business you can fix. You can fix your balance sheet. And most people don't. Like, most people don't focus on that. They put 98% or 99% of their effort into their P&L. And they're basically pouring 99% of their focus and their energy in a losing cause, and they're not going to win. And they're putting 1% into their balance sheet, where you're 99% likely to succeed on the balance sheet under the Bitcoin standard, and you're 99% likely to fail in the operating business on the fiat standard. But conventional wisdom is to focus on the operation and dismiss the balance sheet. And if you want to escape from that dilemma, you have to invert that, and you have to fixate on the balance sheet, and you ought to play defense with the P&L. You're a dentist. You're going to keep being a dentist. You're not going to grow 25% a year forever. You're not going to crush Apple and Amazon and Google. You're a dentist. Just run a profitable dentist practice. And then take all the money from the profitable dentist practice and buy Bitcoin with it. And if somebody wants to give you a massive loan against your dental practice, mortgage the dental practice to the hilt, borrow $10 million, buy Bitcoin with it, and you'll wake up and you'll be a billionaire, not because you made $1 billion in dental fees. You'll be a billionaire because you were smart enough to borrow money against a dental practice, buy Bitcoin, and it 10 to 100x from there.
In your vision of capital stewardship, what is your plan as you see where MicroStrategy is going to go in the next 5 years? And then let's also kind of close our eyes and imagine a little further 10 years and walk us through the evolution of what you expect strategy to look like.
We're a Bitcoin treasury company. That means we hold Bitcoin as our primary treasury asset, and we offer securities to investors that they need to give them they slice various risks of performance, volatility, and risk off of Bitcoin. So some people want low risk, low vol, low performance securities, and to them we would sell them a preferred stock like Strife, or convertible preferred like Strike, or a convertible bond, right? The convertible bonds are like 70 delta instruments, and Strike is a 30 delta instrument, and Strife is a 0 delta fixed income instrument. And one of them looks like a 20 vol, and one of them looks like a 40 vol, and one of them looks like a 60 vol. And then when we take the leverage from selling those securities, we feed that back into the equity, so that the equity itself ends up being higher vol, higher performance than BTC. So we take, if BTC was a 60-60 type instrument, 60 vol, 60 performance, we aim to create a 90-90 equity, because some people want 90 ARR and 90 vol. And then we aim to give somebody else maybe we want to give someone else the 60 ARR 40 vol, with a Strike, or with a convertible thing. And maybe we want to give somebody else the 30 ARR 30 vol type instrument. So we're giving people different tranches of volatility, risk, and return. And then, of course, the equity itself is the building block for a whole host of derivatives. So you can build the entire options market, and there's like a massive, like $70 billion open interest in the options market. And then you can build other ETFs, right? The levered ETFs, the volatility interest generating ETFs, the short ETFs, every other flavor of derivative. And our position is, our job is to do what everybody else can't do. So for example, you can sell, if you're a trader, you can sell covered calls all day long. So I'm not going to do that because you can. What I'm going to do is create a convertible preferred stock because you can't. So what we're doing is we're creating those various securities, everything from a pure currency swap. Like, for example, if I give you 10% interest and you give me back money, and I'm generating BTC yield and you're generating USD yield, that's a pure currency swap. I could do that in Canadian. I could do that in yen. I could do that in euros. I can do that in USD. So that's one type of security. And then above it, I can create the convertible, various flavors of some yield, some conversion rate, all the way up to, pure Bitcoin, or high octane, high leverage Bitcoin. And for us, we're always going to aim to make the equity like 1.5 to 2x Bitcoin. And I can't, it's not clear to me how I get much beyond that, but then we leave it to the rest of the financial market to concoct 2x to 200x leverage by using all of their option interest, option tools, etc. And at the end of the day, the result is everybody gets the flavor of volatility, the amount of volatility, the amount of performance, the amount of risk that they want in a liquid fashion on a compliant marketplace, right? That's our mission. It's not going to change, right? Everything we're doing, you can do at the scale of $100 billion enterprise, or $200 billion enterprise, or $400 billion, or $800 billion, or $1.6 trillion, or $3.2 trillion, or $6.4 trillion, right? It's pretty much the same exact structure. You're just creating more of each type of security. And the thing that makes it possible is that you're building on top of a foundation of a digital scarcity, which is a commodity,
Mm-hmm.
which itself, right? Bitcoin can scale from 2 trillion to 20 trillion to 200 trillion. So to 400 trillion to whatever trillion, right? So everything is very scalable in all directions as long as you maintain a balance in the capital structure between the various instruments. I'm showing you how to build a 100-story building using steel, which is Bitcoin, a digital scarcity. To equate Ethereum and Solana to Bitcoin is like equating balsa wood and clay bricks to steel. And yeah, you can also lever them, but you can lever balsa wood, but levering, you can build lots of things that are steel containers and you can use rubber bands, but it's not the same thing. So there's a reason that securities law prohibits public companies from capitalizing on securities. And the reason is because you can lever a security 100 to 1. And so if I actually issued 1% of the float of a security, I could take $10 million and create a $10 billion market cap company. And so you would literally have 10 million in the float. And then you would tell yourself you had $4 billion of collateral on your balance sheet after you levered it up. And then you would start to act that way. And then when the bottom of the structure comes crashing down, you get a situation like Terra Luna or like FTX. Both of those were examples of companies levered on proprietary tokens. And so Solana and Ethereum are they may not be securities, but they're definitely tokens. And as tokens, they're not a commodity. And so I would caution anybody listening here against levering up on a token, right, or a proprietary asset, because it's kind of like trying to copy my skyscraper and doing it with bricks or with aluminum or with copper, right? The entire thing's going to buckle and lots of people are going to die and it's going to be a catastrophe and you're going to take out the entire city block. And that did happen. It has happened over and over again in the crypto world. Happens all the time. People think that they discovered leverage, and what I'm doing is not an intelligent or brilliant idea because I'm using leverage. The reason it works is because I'm putting leverage on steel. I'm doing it with the right material. I'm actually using a product which doesn't deflect, right? And so Bitcoin is a crypto asset which does not deflect. That's why you can lean on it with $10 billion of leverage or $100 billion of leverage. And if you do the same thing with FTT token or Luna, or pick your favorite token, if you do the same thing, you're going to find it will buckle at some point. And when it buckles, there's going to be catastrophe. After 10,000 years, people haven't come up with a better material to build a ship with or a building with than steel. It's like, there's a lot of other metals and a lot of other materials and a gazillion, million, whatever alloys, but it oftentimes happens in nature that there is one best answer, and the best answer is good for 98% of all the applications. And everybody that ever came up with the different, the crystal ship and the diamond ship and the rubber ship and the wooden ship and the aluminum ship and the whatever, and it's just like, it was good for a little bit of time, and then it hits a hurricane and it snaps in half and it sinks and everybody dies. And they're like, well, I got, never done that before, So I caution that degree of innovation, right? Like, you have an answer. God gave you the answer. You can either embrace the answer or you can insist on being different, right? And I would advise that if you want to build a different city, don't innovate in the dimension of steel. Keep the steel, right? Pick a different way to innovate. Maybe make the boulevards wider or something like that.